Incredibly challenging trading day, very choppy. I'll show you the price action in a minute. And down, hypotheticals minus 15,735, live trade minus 16,232.50, giving back more than yesterday's gains. We are on the month, we are minus 5,500 on the month. Hypotheticals on the month are minus 18,635, which is the drawdown. And let's look at the noise in the market on CPI. CPI came out pre-market, but the noise continued throughout the day from that pre-market event, pre-market economic report, which turns into an event. And the CPI was as expected. So the market rallied yesterday into CPI, had a smooth trend, and then chopped like crazy today. We had our largest losing day in this portfolio today, and but we're not at a worst case drawdown. So we continue to morph, and the market continues to get more and more noisy. The amount of noise in this market is just extreme, and you know there's just this tug of war between the bulls and the bears. Fundamentally, the market's lower. The Fed comes out and says they want the market to go lower, and the market rallies in the face of the Fed. For the last 13 years, from 2009 to 2021, the bullish choir has said, do not fight the Fed, and now they are the biggest Fed fighters, and so there's just an extreme amount of noise in this market. Market ought to go down. We continue to try to join the bulls on the way up and get burned. When we try to join the bulls, this sharp reversals, you can look at it on an intraday chart too. Very frustrating and very difficult trading today. Here's what I'm looking at in multi-charts. We are minus 18,600 on the month. And here is let's look at the daily period analysis. Minus 16,170 on the day. Just really extreme. Here's the drawdown curve. We were making our way back yesterday and then just got slammed today. And it's got to be some of the noisiest price action I've ever seen. And I'm going to go over the trades on the day. Here is just a day session only chart. You see also what happened in the NASDAQ is the market sold off, and it's just like last Friday. On Jobs Friday, there was a Jobs Friday report 1 hour before the market opened, and then the noise continued throughout the day. And so if you try to avoid the noise pre-market, it just shows up throughout the entire day. And you see about 180 point sell-off in 13 minutes. On last Friday, there was about 180 points in 11 minutes. Then it completely reversed, and it looks a lot like last Friday's trade, except it's a lot choppier. You have one fast sell-off right here. You have this fast sell-off, 180 points in 13 minutes, completely reverses. Then a slow sell-off, choppy slow sell-off. Then a rally. Then another fast sell-off. This one took out a lot of long trades. If the market had just done this, there's already been a lot of noise in the market. So it's surprising to me to see this much noise in the market after the amount of noise we've already had. There's hardly any days so far this year that we've seen where the market moves in one direction for very long without just an incredible amount of noise. And so this is another fast V reversal. You have one fast V reversal, a slow V reversal, a fast V reversal, and then a slow kind of a V reversal into the close. And so let's look at last Friday's trade as well, so you can see what I'm talking about. You had this was also it was 180 points in 11 minutes. But when it resolved, we were stopped out, we had longs that were stopped out, then we had shorts that were stopped out, then we had longs that were stopped out, and then it resolved into a smooth trend, and so we were able to make money into the close. But today, this end of day chop was much more violent. So it looked like this at the beginning, but then the end of day was more like this, and so we just kept getting stopped out on these moves. And so after all this, typically when you have a lot of chop, then you have a trend, or when you have a trend, then you have a chop. There's not much trend cycle. We do have tomorrow's trade, which is Friday. So you know, things move in cycles, and so after a big losing day and a drawdown alert like this, we are looking at Friday's trade. Let's look at the trades on the day. So only one strategy was profitable on the day, and it seems like, you know, yesterday we were up 11K, and then today we have a largest losing day, and so it seems like that that is a pattern. Every time we get in sync with the market, then it becomes more noisy, and we have more noise, and then we morph, and then the market gets more and more noisy. So the amount of noise is extreme. Cover 3, S&P stopped out here. Tick fader was the only winning strategy on the day. Small gain there, 375 per E-mini. And the momentum reversal kept trying to short. I thought the market should have gone down today. Let's look at the 24-hour session again. The initial move in the market on the CPI was down, and so the market rallied in the CPI. CPI came out. It was as expected. So CPI report was expected. The numbers that were released were actually what was expected, and this is what the noise. This is what the result of an expected CPI report looks like. It's just massive noise. There was some Fed speak. Fed said basically said the markets are too high, and the market just said we're going to rally anyway. And then you see the S&P sell off, and then the market rallies to take out those highs. Then it sells off again. Then it tries to rally and take out the intraday highs. Then it sells off again and it takes out those intraday highs. Just always trying to run back to the highs and take those highs out. And so you continue to see this dynamic, stop running dynamic, excess liquidity dynamic in the market. And I think the Fed's balance sheet makes this creates this excess liquidity and distorts true price action. And the focus is on interest rates, but this Fed balance sheet is still really, really high. It's only given back about $500 billion. There's about $5 billion of stimulus right here. And just a few years ago, the Fed's balance sheet was down here below $4 billion. Now it's up here at $8.5 billion. So still a really bloated balance sheet. Not billions, but trillions. So I said billion, but this $8.5 trillion versus back here about $3.8 trillion. And so extremely bloated balance sheet by the Fed enables this type of market levitation. And there's been a lot of studies on this to show that. So let's look at the NASDAQ trades on the day. We saw we've gone over the S&P trades, 1 for 3 on the S&P strategies. And then AT 2022, same thing. This happened last Friday. Market sold off hard, got short on AT 2022. Tick pullback was long, and it got stopped out. Last Friday, the same thing happened. Tick pullback was long, got stopped out on this huge sell-off. Got short AT 2022, AT 2020. Then the market reversed and stopped those out. And so just, but we didn't recover as we did on Friday because you see this constant stop running price action Viper taking long trades. We're trying to take these long trades and they just get slammed with this stop loss price action. Tick count trend stopped out 0 for 3. Viper 1 for 3. AT 2022 stopped out. AT 2020 stopped out. Tick pullback stopped out. Just an ugly, ugly chart. Weak bullish action to continue to prop up the markets. We've seen lots of propping at the end of 2022. Now we're seeing the propping push the market up a little bit, propping it up in a little bit of an uptrend. Cobra 3 got long here just to stop running here type price action. Tick reversal, not a bad trade on tick reversal, got long. And then tick reversal 2022, not bad. These were near equity peaks. A lot of these strategies are doing well, but today they all just got caught up in the noise and it was a very difficult day all at the same time. We mainly had long trades. Even the market was up, but not much, 0.42%, up 49 points. Momentum reversal, stopped out on taking the short side. Tick pulse, stopped out here, stopped out there. And so just a very, very weak bullish agenda, propping the market up without really moving higher. Let's look at the daily charts. Continues to be interesting to see, I think the market's up 3 or 4% on the year. Not really anything to celebrate as a bull. It's just, in line with the noise that's already there. And the VIX just surged down to below these lows over here, below these lows, and multi-month lows. Let's look at the VIX on that. So this low right here has not been seen since April of 2022. So a very very low reading for this type of market environment that we've been in, and it will be interesting to see. I think we're due for a sell-off. I'm not sure if we'll get one. This liquidity keeps driving the market higher. Let's look at the portfolio calculator. So the worst case, the current drawdown is about 18.6. We exceeded this today by about $4,000. So we've just adjusted it. We've just adjusted our portfolio for this level of noise, and yet we still continue to get more and more noise in the market. The drawdown is right in this area. Let me get the pin out and show you where the drawdown level is in this area, which is a frequent area. We're mainly focused on the end of day drawdown, and so we have Friday's trade. Fridays have been good for us. We've had the extreme amount of chop today, and so we don't expect a perfect trend. We don't necessarily need a perfect trend, but with this amount of chop, we continue to anticipate a scenario where if you have extreme amount of chop, then you're due for a nice trend. And so we'll see if we get one. We'll manage risk. If not, readjust if we need to even further, even though we continue to reduce the number of systems and manage it for this amount of noise. We'll have to continue to adjust if we continue to see this much noise in the market. And so I'm personally surprised that there's been this much noise. Here's the close trade drawdown curve via multi-charts, and we're still working on the intraday stop loss scenarios. It's very challenging technically to set that up within a portfolio arrangement. Like I said, it's been surprising to see how much chop we've seen the first few weeks in December before we had just a few days of trend, and now we continue to see extreme amount of chop almost halfway through January. Monday is a holiday, and Friday is the last trading day of the week tomorrow. These are the final trades on the day. Once again, for Thursday, January the 12th, 2000. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.